What's up? Good morning. Thanks for joining. What a day. Mainly a tape reading session. There's no point really try to pull something off from today, because today is a day before non-farm payroll. At the moment, we have a huge manipulation with the news, and went up and tag all these upside target that I marked out before, and then basically same old trick, trapping all the traders want to go long and then just bring it back down. And prior to the 9:30 open, distortion, building more longs. People want to get the retest and go long, anticipating like market open and will go pump without stopping. So because we have a few previous day was like market open and then it go up, so this is the trick. And price went up a little bit, take out this little short-term highs and then collapse, take out this low. Now forming a looks like a reverse, but I'm not too sure because most of the upside target has been delivered for intraday target. So we have an external, this high was the external high, these are the internal, which is the previous weekly high and previous daily high already got taken. So I think this will hold price down and you can short from here, which is more logic way to do it instead of try to catch the bottom. I would say use this yesterday first percent fair value gap and short for the continuation lower with this swing high for stop loss. Targets the previous daily low, which is here, 21,641. Now as far as I concerned, this will be finished once if it's sweep it and bring it back up into the equilibrium, then the rest of the day will be very low probability and chop. So unless you want to uncap today's price move before non-farm payroll to try to set up something for tomorrow, otherwise they will cap the price very tight within this range. Not going to escape this range, I don't think, because it did the seek and destroy already, take out the buy side and then now sell side. So intraday highs and lows are already taken, then it leaves you no targets to aim for, which is why I'm not going to touch that. I mean, we have a very good trade on the gold and the oil, which is one-sided trending move comparing to the wild NQ. This is very easy. And the euro, which is very easy comparing to NQ or ES. They will do a lot of manipulation. This one, no manipulation at all, because you have the dollar is trending lower. Been talking about this target for a long time. Trump will bring the dollar down to fight the interest the US debt need to pay. So he either lower the dollar or cut rates, which is Powell won't cut rate for him. And like I said, BTC, look, I mean, you read the price for a long time, you will know this pre-market pump is a liquidity grab or stop hunt. You don't basically like this if you're trading BTC. If pre-market is like prior to the New York Open, price is dumping. Usually after like 10 o'clock, it will start pumping. And then if it's pumping before market open, after 10 o'clock, it will start dumping. But how low it will go, it may just going to sweep this previous daily low, and then a reversal back into the means threshold of yesterday daily candle, maybe something equilibrium level, maybe if you measure from Monday to Tuesday high, the equilibrium, you can eyeball it. It's around here, around the weekly open and the daily yesterday previous day daily open, right? They can do that because it's a non-farm payroll week. They can cap the price within the range, not going to let any large movement, because it is more logic to move it with the news. But having said that, we have Trump, which is a bigger news than any further news, like the non-farm payroll or CPI. He tweets, market move a lot, so it's very hard to say. Sometimes if tomorrow he tweets about the deal with China right before the non-farm payroll, say 8:15, something like that, or 8 o'clock, he loves to do that, right? He loves to front run the news. So once he tweets about, say, the deal is not going well, and then market will react, and then it will start dropping. And then once the non-farm payroll release, it has nothing to do with the drop anymore. It will just release and do nothing. We've seen this before. So be careful when you try to trade that. He loves to tweet like around 7:30, 8 o'clock. So if you try to frame something tomorrow, maybe a London Open, use that volatility from London Open 3 to 4 silver bullet, but you only look for like 10 to 20 handles at maximum, or you wait. I will wait. See, now price sweep this low, the intraday, the London low, and then stop, right? This is the type of price action you will get. Seek and destroy. It sweep the Asia high, and then now come down, sweep the London low. It can stop here, come back in the mid, and then chop for the rest of the day. Now NQ, I think previous daily low is the the closest liquidity pool, because a lot of traders are really hoping to go even higher. That you see the trend line, sell stop, but we have a bullish SMT with ES and YM, so very difficult to say that where it's going to go. If price can find support closing back above this inversion, then you can use that to target this 930 high. The XY is coming down. Most of them are just doing the seek and destroy only. The gold or the oil, euro, maybe the pound as well was trending. Look at the yields. Came down a little bit and then coming back up 4.86%. I think the bonds will come up eventually, take out these highs. You can use the ICT concept on even the bond market. It's exactly the same, any candlestick chart. So these 10-year yields will fill this gap. 10-year bond, and then you will see yields start coming down. It's already break of structure, you can see that. So you will see this low for 30 years yield will be 4.6%. 2-year yields will be like 3.7%. So expect the market to go even higher. Anything going lower is just a manipulation, really, because the all-time highs, all this upside target is still there. I think that problem now is money is expensive with the yield so high. Now smart money wants to realize their profits when the dollar, still relatively, expensive. Once they want to buy is when these assets are very cheap and the cost of the money is cheap. So we will keep going up higher until the yields are really coming back down. Before that, then you see a market correction. Most of the people are looking at June time. Market bottom at June or July, but ICT, his last videos, I can't remember which one, but you can have a look. It's a recent video. He talked about seasonal tendency. June used to be a bearish seasonal tendency for NQ, but by the way he looked at the chart and the price is so high up, he doesn't think we will get the bearish June seasonal tendency. So whenever the market is not following the seasonal tendency, it will be a super bullish. So if June is not a bearish month, you expect a very bullish June he talks about this. I think 2020, 2023 in his 2023 mentorship video as well. I remember that because we had the same year with not June did not bottom. Let me check. I do recommend you guys try to watch all of his videos. Yeah, 2023. See that? You see the June? We have a very bullish June on 2023. He was talking about this. He said whenever you get a bullish month like this, is not following the seasonal tendency, you will tend to get a very bullish price action, and then we pumped to the all-time high during 2023. And look at the you see in 2022 we have a June very bearish month. So once the seasonal tendency is on par, then everything just follows. But once you get back, it's not following the seasonal tendency, then you have a same as 2024. You see that? Then we have a very bullish year as well. So it's this one 2020 same, and 2021 is the same. 2022 and 2019, you see June almost sweep the Q1, the March low, and then finds bottom, the market bottom here, and then rally till the end of the year. See that? And then the COVID crash, take it out, and then pump again. You get the picture. Market chops, right? It chops around. See now, once the 9:30 open, we get this volatility injection, and then everything just, the volume it just dies off. As usual, 10 a.m. chop. Now, a lot of traders, they cannot hold themselves back, will get chopped up in here and flowing accounts before even reaching the non-farm payroll. Most of the moves are done, everything is done. Look, gold, take out the buy side, come back to the midnight open. I think it will just sideways. And then oil, maybe take one more pump, take out the previous monthly high, and then probably just sell off and then chop. Same as the euro. The DXY will start grinding lower. What's Bitcoin doing? Oh, my screen is not working. Bitcoin is trading lower, which is good. Because this, why I explained it clearly from yesterday and the day before, when you see this daily CB, look at the daily level. First we have a daily inversion. We take out the all-time highs, make a new all-time highs. You have to watch the last fair value gaps that put this high, put a new high. This is a very key fair value gap. It doesn't matter is it on 5 minute, 1 minute, 1 hour chart, it doesn't really matter. As long as this last up close candle, the fair value gap right before that, and once it's get a down candle over that, and then break, change in state delivery, this become an inversion. This one is very key. And then you see how price broke down from here. On the 29th of May, we shorted this and then come back up, form another CB. Price hit that, we shorted this one, another one. Now price traded above that, but now see the wick, see the rejection. Now the clear target is downside. And look at the lower time frame. Look at this weekly open here. The Tuesday daily open is here. Today daily open is here. I said this, the weekly profile for classic sell week, Tuesday high, exactly like this. Tuesday high of the week. Tuesday traded into the premium daily high time frame array, took out the Monday high, change in state delivery. Another inversion, same, the one that is I showed you in the daily time frame, same one. See, price is fractal. Fail to close above that, break over, break down, chop, come back up, tuck out these buy stops, hit it. The consequent encouragement of this inversion one more time. You see the bearish order block, these 3 up close candles, bearish order block, sells off, down, come back up, another inversion, and there's also a 4-hour inversion here, and then break. Did the same thing, come back up, because these highs are for these high leverage traders. Their liquidation point, it's not their stop loss. Their liquidation point is around here. If they are using 100x, try to short this. Their liquidation point is right above these highs. So what price did? One got candle, come and take them out. Close outside of this 1 hour inversion. See that? Tap the weekly open. Just, closing right at the weekly open, below the weekly open, and open below the weekly open. Wicket, come back down. And then below the Tuesday open, daily open, back below this daily CP now, and back below our daily open. Now this is the daily wick. The daily power of 3 now is happening. So the accumulation during the Asia time, London did the manipulation, pre-market, now distribution. So it's the matter of how low this distribution is going to be. Is it going to be just sweeping the previous daily low, or the Monday low, or the previous weekly low? So this is, you need to manage your risk. You got the setup, then how to manage it, you know, that's entirely up to you. You know, somebody want to aim for just 2R, you know, they use a type stop loss, maybe price already hit your 2R already, then somebody happily to walk away now, you know, with sweeping the previous day low. Somebody may say, oh no, I like to swing for longer. Then they will, you know, move the stop loss lower, trail the stop loss, aim for a lower prices, you know. Now price is below monthly open. There is a catch for this, because below monthly open, we have just started this month for 5 days. So this can be a buying opportunity for smart money. They will buy below opening price or sell above opening price, right? So this is, you look at this open is the monthly candle open. So we have to anticipate which side is the wick. Yeah, if this side is the wick and the rest down, the price action down there is the candle body for the monthly candle body, then we expect a bearish month, right? Even though it may snap back up in the maybe end of the month, it doesn't matter. We are anticipating the move right now. So you have to ask yourself which direction this monthly candle will probably gonna be, right? Then you look at the weekly. The first weekly candle. Will the first weekly candle go down first? And then the rest, maybe one more weekly candle to go down, and then the rest of the 2 weekly candle, the third one and the fourth one will snap back up, and then form the monthly candle with a long wick to grab, you know, fill this imbalance, and then come back up, closing somewhere here. Then July we will have a open up here, trade it down a little bit, and then up, and then go to wherever, all-time high or 120k, something like that. You know, we have to anticipate how the candle is going to print. Then when you see a lower time frame price action, then you will have a picture how to set up your trade using a daily time frame, the price action, the PD arrays. Because this thing is starting to move now, is taking the previous day low. Yeah. So I hope you guys shorted this. Anyone shorted this? Because I post this trade in Telegram today. This is a pretty straightforward. Using this power of 3, you don't need to go into like 15 minutes or 1 hour. I mean 15 minutes or 5 minutes to look for a fair value gaps. There's no point. You just have a reasonable high for swing high for you to place your stop loss. Like I put my stop loss above this daily high, the Tuesday high, which is the high of the week. So if I'm wrong, what do you mean take on July? Sorry, I don't understand. Can you explain that? Yeah, so for me, when I enter this short, I place my stop loss right above here. So if I'm wrong, which means this weekly candle is gonna go up. Yeah, so then I accept that. As long as this price is not trading, closing any high time frame candles above the weekly open or the or yesterday daily open, then I have no worry about the low time frame, the chop. You can do whatever they want to manipulate the traders, like today this pump before opening. It's fine, they just manipulate. A lot of traders will get trapped in these tiny moves, and I think if we take out this weekly low, we liquidate James Wayne, right? his multi-million position will get liquidated very soon. I think he got liquidated some of his position yesterday, like I don't know how many million, maybe 100 million, something like that. See, it's not worth it trading Nasdaq at all. You need to know when and pick what assets to trade. Sometimes if you got stuck in this PA, it will drive you mad. Like if you try to look for a silver bullet during this 10 a.m. which ICT from 10 a.m. to 11 there will be a silver bullet set up, right? But as you can see, you have no fair value gaps to work with. See that? That means if no fair value gaps, only one here. So this one is a long. Okay. So you pick this trade, use this low. Of course, you're not going to enter now, and look for not much. Something like this. Now you're done. Okay. That's all. You're not going to aim for much, but silver bullet, 30 handles, easy. Okay. You need to choose what asset class you want to trade. Basically, it's like that. Now look at that previous daily low. Sweep. Now is the time to monitor this. You want that to sharply do a V-shaped reversal and start attacking these highs, because it can turn out to be a seek and destroy day. So manage your risk. Now start to spooling and hit the first percent of value gap. You can go to this data high 930 high maybe. hard drop here. We traded back to the first percent value gap and then failed to close anything inside that, and then aggressively sold off. And previous daily low. Maybe like a seek and destroy profile. And we will see previous daily low getting tagged here, and then sharply come back up, and then done for the day. Reclaim, and then go 1 minute inversion and sudden drop, very volatile, and you're getting this candle jumping, which means volume is extra low today. Very volatile. inversion here, and balance price range. See how this first representative really got holding. Beautiful, look at that. Nicely done, this one. Now maybe aim for the data high. Yes. See that? Coming back into the range. Now this can happen hitting this CB and stop, or trade it through that, find support and go even higher. Then you have a previous daily high right there. You have to see how this daily open. If price traded above the daily open, then this part become the daily open wick, and once price traded inside above the daily open, it will become a green candle, and then start working up and finish the daily candle in green. It will happen if Nasdaq keep trending higher. As long as price staying below the daily open, we have the monthly open, then this daily candle can still be bearish candle. It's just a matter of where the wick is going to finish. Is it going to finish here, and then the rest of the day you will be seeing price working back and forth within this range. Or maybe you can sweep this Monday low, aggressively come up, I think, which Nasdaq is doing right now. Then it can lead to changing this daily candle into green. And once around 11-ish, then pretty much it's settled. Maybe then we have a green candle. Possible to take out this previous daily high. So in your short position, you should take profits. Now data high is coming. Still works, everything still works. ICT works all the time. Now I won't worry too much about taking out the high, because you know, you look at the FIB, you will see. Yeah. Hit the constant encouragement of the wick. Now you really want to see how this candle closes above, then more chance it will keep trending higher. Then it will look for external liquidity instead of internal. Then the next one will be here and here. Fell. So this one only good for 1.4 hours. Now we have some clean lows here. Seek and destroy, meaning that we'll go for this low now. BPR here. That's the setup. Still waiting for the previous daily low. This basically is holding this, so it may not. It has to close aggressively below this, otherwise it will use this as a support and start attacking the highs. Fell at the daily open. Look at that. If it cannot close above, meaning this candle is still a bearish one. Find support. Let's see how price react to the BPR. If it's a bearish order flow, it should not have any interest trading back up here. We have a bearish SMC, so it's going lower. Bearish SMC with ES. And YM. Now hitting this BPR, you need to see how price closes. Is it going to close below it or disrespect it and go above it? BTC is going lower, no doubt. I think the last manipulation happened already. Then this is going to take out perhaps Monday low as well. So now it's going towards the data high. Using this 1 minute. And the first percent of our gap, see how it tapped it. 1049 1 minute candle, it wicked. This is like an institutional auto for entry drilled. And then nothing closed in the bottom half of this 1 minute busy. Trade it up, use that inversion from there, using the BPR. Disrespected it totally. So once you see something like this, BPR got violated, and it means that the price is on the other side of the price. And it's gonna trend higher. And when Nasdaq is pumping hard, the short for the BTC usually doesn't play out. So you're looking at taking profits, even if it's want to drop, and then you wait for Nasdaq to turn around and then look for opportunity to get back in, want to see some speed, punch through this consequent correction of that wick. The wick from the Trump news. Once it's through that displacement, and then the next candle, you usually will just wick it, tap it, close it back above that, and then send it higher. Let's see the speed. Come on, thank you. Do that. Send it. Volume imbalance. Now it should go higher now. It did the immediate rebalance. I want to see it fail again. It fails, come back down, chopping more, and then maybe go lower. Going through. Top hunt. This is the last foolish video. Once it's violated this, it will roll over from here down fast, maybe back to here, just like yesterday price action, and then maybe sweeping this low, chop, come back up in the mid, who knows. If it wants that high, it has to go now. Go, like I said, it'll come back right at the London low, London open. Most of these move are finished like this. Look, already done. The move was done. DXY just take out the sell side and then back to equilibrium. Now it looks interesting here. It looks like it's about to Russian. The war, I don't know, I'm not sure about the war now. This war's been on for years. I'm worried more about the Trump tweak, because it just, the thing is, the news is just about, okay, let me pull this up. Just in, that was the 9 o'clock, right? President Trump holds telephone conversation with Chinese President Xi Jinping to discuss trade. Okay, but there's no context in that. They're just saying that they were talking on the telephone, but it doesn't mean they come to a deal. Or is it just an arrangement, announcement for they are about to make a phone call, or they already made the phone call? We don't know. He can come and turn around and say, oh yeah, we had a really bad conversation, and the market will dump about 1,000 points. If it's during the weekend, and then the Sunday open will be like 1,000 point gap lower. Yeah, if it's a good news, and then oh yeah, we came to agreement with the tariffs, and Sunday open gap up, and then next week all-time highs. Yeah, that's more. I'm concerning about this more than any war news, unless it's a new war. Even that India and Pakistan, the news didn't really move the market. Maybe they moved the Asian market, but not the US market. because we don't really worry too much about the war news, right? Why? I tell you the reason why. Usually war news break out during the weekend, and we don't hold position during the weekend. I never do. And so doesn't matter market gap up or gap down, and either way the news is good or bad, doesn't really matter, because we only look at price action. It's only gonna go up or go down. So everything is like these kind of news is already been planned, and just like FOMC and CPI or non-farm payroll, market will react because it's a future market. Futures market is gonna price in whatever news in the future, right? It's like you see price is trending high because market is pricing in the Fed rate cut. So when the Fed is starting cutting rates, market will drop, because that's why people call it sell the news, buy the rumors, because it's a future market. It prices in the future expectation. They anticipate because where market's likely to go, and this is why smart money is always ahead of us, because they got the information. They are like ICT said, they are informed money, and we are uninformed money. So we only can react, but it's okay as long as you give us a chart, and with all the PD arrays we can read it. Doesn't matter it go up and go low. No, the problem with many ICT traders, right? I get that all the time. I understand. I know your point. A lot of them, majority of them, maybe only like 10% really know about the ICT concept. Most of them, they don't really know because they only focus on 1 minute time frame. You need to look at the price action as a whole. Start from monthly time frame. I always explained it with the monthly power of 3 and the weekly power of 3 and daily power of 3. A lot of ICT traders, they don't use power of 3 at all. They only use fair value gaps and order blocks. They only look at the for example here, they only look at the candlesticks. They think candlesticks with fair value gaps and order blocks and highs and lows is enough, but that's not enough, because what lies in the high time frame will dictate where price is likely to go. So like the one I explained it on the BTC, why we took the short, and why when price sweep the previous daily low, and I said you need to worry, taking profits, because price likely to come back up. These are all hidden within the high time frame. Same as this setup here. We're only doing tape reading, but we know which value gaps gonna work, and most of the time, not all the time, I get wrong as well, but most of the time we know which direction it's gonna go, because we understand the power of 3, where a lot of traders, they fail because they don't get that, because we are using time first, then price. And if you look at the price itself, it's like trading patterns. It has the same meaning, trading, geometry, trend line, support, resistance, because you are only looking at the candlestick pattern from the previous familiar price action, if you know what I mean. If people just memorizing, well, okay, if candlestick do this and will do that, then you are trading patterns. You're not trading time. Okay, you're not trading the high time frame narrative. While as a time, a lot of people get get it wrong of the concept of time. It's not just macro times, it's also the power of three, the opening times, the closing times. Each hour has an hourly candle open, that's time. Each day has a daily open, that's time. A midnight open, that's time. London open, that's time. New York open, that's time. So you need to use all that information and data through back testing, and you will find your model. We only need like 70 points, 50 points, like the one that I said earlier on, the silver bullet. From here, the silver bullet, the 10 a.m. ICT 30 points, somewhere around here, 30 handles here. See how tiny that price action is? How easy is that? Look, 1.2 R, that's enough. 10 a.m. open here. This is power of 3, 4 hour power of 3. Okay, in case some of you missed it when I explained it last time. You have a, get this, regardless what's going on, we don't care. Okay, we only look at, you only trade 10 a.m. power 3. Okay, every day you come into charts and you search, you wait for 10 a.m. candle to print, and then you look for the 4 hour power 3 to trade, and you want to trade a distribution. Okay, open here, the closest low is here. What price did is come up, sweep this high, trade it back below, sweep this low. Okay, now people who shorted this prior to the 10 a.m. open with the 9:30 drop, 9:30 drop here, take out the sell side, come back up retracement, back into this 1 minute fair value gap, and start dropping. This is the manipulation. For those who missed the short, want to get in, we did try to frame this one as well, but today is a tape reading, so you can journal this, knowing that this is not going to work, right? A lot of traders will fail here because they'll think, oh, this, as long as they see this fair value gap and then price return and then will drop. It doesn't work that way all the time. That's the ICT trader you're talking about, right? And now sweep this, drop one more time, gave them one more chance to re-enter because price came up and stopped them out, right? One more time, sweeping this low. Look at the bodies. No closure. Okay, meaning what? Wicks do the damages, and came back up, form a short-term swing high, swing low, this swing low, did not close anywhere below here. We have a that makes it an order block. Okay, I don't really use order block all the time, but you need to identify which one is order block. Okay, and we have a fair value gap here, the only fair value gap we got. Now what we do is, when price is not printing this, we are waiting price to get back up, and the next one, this one, open up, traded below, did not close above the consequent encouragement of this 1 minute busy. Yeah, and that's your silver bullet. Because silver bullets has to, at 10 a.m. sorry, 10 a.m. it has to sweep liquidity, change in state of delivery, boom. Here you can handle here, aim for 30 handles, or you wait for this breaker. This is all about narrative, not trading patterns. This is a breaker. You can enter on the breaker, the next candle, it go up, open, touch that, breaker, 30 handles, still doable, right? So that's 2 setup silver bullet. If you can repeat that every day, 30 handles, 1 mini, that's $600. Yeah, you can repeat this every day, and there's plenty of silver bullets within London 3 to 4 a.m. and then the 10 to 11, and also you got one from 2 to 3 p.m. PM section. Okay, London. Did we get silver bullet in London time? Of course. 2 a.m. we get open here, sweep the low, and we form our SMT. You see the SMT? You see how flat YM was? How flat the NQ was? And sweeping the Asia low, find support. This is your silver bullet. No, no, you can say your opinion is fine. Totally agree with anyone got their opinions. I'm not those ones who try to defend anything, you know. I'm just using ICT concept as a tool. I know that he's not everything, but within this candlestick the patterns, the candlestick printing, I'm reading this like every day. Like I read more than many of the US guys, because think about it, I literally wake up 7:30 Asia time, so I read the Asia section and the London section and the New York AM section, sometimes I carry on and read the PM section, so I have more chart reading time. And I know, I mean, you guys see me not just trading Nasdaq, right? I call the gold and the oil, the euro, you know, the trades I put out, and the crypto trades. You know, I know how to read them. And because why I stick with ICT, because I only use ICT concept to read them, and I found it quite successfully, right? So I have no doubt about his concept. But I'm sure that in the market, because I got friends who work in private equities and they operate differently, you know. And but when we talk about trading, and then I told him about the ICT stuff, and he find it really interesting, you know. I have friends that trade only like patterns like wedges and head and shoulder patterns. He's profitable. So I have nothing against other traders, to, you know, as long as you can pull something out from the market, right? But I am doing this because of ICT concept, so everything I interpret is based on his concept. I understand the things going around, but at the end of the day, they just news are just an excuse, really. I mean, you look at this is what I usually look at, the yields and the bonds. They are the biggest market. This is the biggest market, okay? And then I posted in the Discord as well. I can't remember how much. $120 trillion market. And the second one is the ES. Yeah. So we follow the money. Where the money? The money is in the bonds. So whenever the bonds are moving, you see yesterday candle. Can you see yesterday candle? Huge candle. If you see a candle like this on the bond market, it takes a lot of liquidity to move it. So that's why yesterday, where is it? A bit laggy. Can't remember when. Let me check. Anyway, my computer's a bit laggy. During the opening, when prices, that when price drop and then reversal, the V-shaped reversal, it got one-sided, go up and up and up and up. This is what happened. And guess what? Today, I read it because they put $100 billion into the bond market. This is why the Nasdaq pumped so much. It's not like I'm not talking about this pump. You need to identify the pump. Nothing like this. Not like this. This is manipulation. Okay, I'm talking about this small 1 minute candle. These type of pumps, like this, you will having a hard time. Try to go against it. Have you ever tried this? If imagine the day like this, you find a low of the day and price start reversing, and it just keep. Don't look at this, right? It will be like this type of candles from 10:15 to 10:30, right? But it will be like the whole day. It will go up, blah, 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 blah. I traded these days, right? I literally longed during the London low, and then it just rioted until what, 2 p.m. It went up like 500 points without even a small retracement like this. That day is the Fed putting money into the market. And when people say you don't fight the Fed, that's the day you don't fight the Fed, because you try to short that, you're definitely gonna blow your account. Okay, so understand where the money is. Always have this chart open next to you, knowing the yields and the bonds, and then look at the ES. ES has the most volume, money in it, and with a little bit of technical analysis, you should be fine. I know a lot of people they buy at the low of the day and get out the high of the day without even looking at this chop. Like we trade BTC, I don't go into 1 minute time frame. I'm just using weekly high, weekly low. You don't have to be getting a home run. You just need to get some of it, and then hit and run. Come back next day. Like today, this short. If you take TP here, you won't care much about this retracement. It can go all the way back up and take out the previous day high, right? But who cares if you bank here already? Yeah, we're not here to marry these candlesticks. We're here just using it. So regardless what's going on around the world, the news, as long as the missile or the bomb doesn't drop next to you, if it's far away, then just let the news play out, like the CPI and non-farm payroll or FOMC. Let them play out. Let the chart run. It will leave footprints. It will leave imbalances on the chart. It will leave highs or lows on the chart. And like this, it leave buy stop here. Once it sweeps the sell stops, then we look for the buy stops. Yeah. Don't try to get too attached to the bias. Always have your bias. You can change it. Don't get married to your how to say, you accept you're wrong. People can be wrong all the time. You only need 50% of win rate. You don't need 80% of win rate, right? 50% win rate to risk reward, risk to reward ratio. Then for the long term, you stick with your plan. You're being disciplined, then you should be fine. I know that I don't really care about where ICT got his concept from. I mean, he has his own agenda. I mean, he make all this drama on X. I don't really care because he's a person. I always say, don't take on all the words he said. and don't think he's already giving us all the stuff he knows. He may be just say fair value gap extract. For example, if you know, if you watch his core content, there's no such a thing as an inversion fair value gap. Right, that's back in 2016. When inversion fair value gap appears is 2023. Not even on, I don't think it's on his 2022 model. The 2022 model is sweep high or low, wait for fair value gap to form, and then return to fair value gap, optimal trade entry to enter the reversal position. Okay, that's what most of the new trader learn, and they get wrong all the time because they only use 2022 model for reversal. So like I said before, if you are trading ranging day, like this price action before 11, okay, it's sort of like a range bound. Using the 2022 model, it will work, but once it's enter this trending price action after 11, it won't work. Because look, if you're waiting for a sweep here, like the one I said it earlier, this BPR, a lot of ICT trader will short when price return to this BPR, and I said, you need to wait for the closure, because price will violate this BPR if we are in a bullish trend. A lot of ICT traders, if they don't have enough, mileage back testing, they wouldn't know, because they are only watching ICT videos, and all his videos, of course, is already there. The setup is already there, because he has to teach you that setup. He won't use a wrong setup to teach you, right? So all his setup is working, must work, you know. But he won't teach you that. No, this is a trending day, how to re-enter there. Yeah, this is by experience. Like, how can you enter here and aim for that? A lot of times that during the live stream with the trending day, we can still enter at the very premium level and aim for 2R, 1.5 to 2R trade, right? Because I did this many times in back testing section and forward testing. Like today, if you don't journal this, you have to journal. You need to journal this, because next time you're seeing something like this, then you know what to do. Before that, I don't know how. I will just short any retracement, right, and long any retracement, and it works during a ranging day. And then once, because price is like this, once price is ranging, means consolidating, and then after maybe 2 days of consolidation, it starts to move and into a trending day. And that once if you are lucky on the right side, then it's fine. But once you are not, then that day you will be try to, maybe price going up, one side going up, you will be trying to short it all the time, or it's going down, or you try to long it and try to catch the falling knife. This is what happened to most of the ICT traders. So understand power 3 is very, very crucial. This fair value gap, sometimes you don't even need it. You just, I put it there to just to explain it for you. Sometimes I don't really at the just I use a daily open really, like those trade I talked before. I use a daily open. Where's daily open? Where's the daily open? Yeah, daily open is here. See, you can really buy below daily open if you just trading a daily candle. Think about that. You don't need to care about what price doing. You only care about where price is now. Okay, you know the daily open is here. You know we are bullish on the higher time frame. And what is the smartest thing to do is to buy below daily open to aim for higher prices. Yeah, you want to buy as cheap as possible, which is here, and turns out to be the right time. 10 a.m. Yeah, 9:30 open, sweep the sell side. 10 a.m. silver bullet, below daily open, below New York midnight open, below London open. You have 3 opening price here, so you buy here. Also below the 10 a.m. file, then you buy. Put stop loss here and ride it. You can ride it, anticipate this daily candle closes somewhere here. Yeah, and who taught this type of model to trade? Larry Williams. Yeah, Larry Williams taught us buy a low of the day, ride the full daily candle instead of going in and out, in and out, in and out. But that's another style. Sometimes because today is good. Today you have only daily open to your stop. Let's say this stop 9:30 stop 50 points. So 5. You don't want to enter 1 mini. That's too much. Maybe 5 micros. Yeah. You enter 5 micros here. Aim for 300 points. Yeah. Give or take, you maybe partial one, take one off in the middle. 150 points, 300 points for the daily close. You will travel stop. That's another way to trade. You don't need to worry about all this chop, you know, that drives you mad. Yeah, I think now everything has reached its target, and rest of the day will be choppy. Try to, you know, touch some grass, go out, go to the gym, come back tomorrow. Yeah, one more thing is I got a bold idea about BTC. Is this monthly candle. I'm thinking this monthly candle will have a wick here. I don't know about the body, but the wick will happen. Get a wick. Not sure about the body. Oops. maybe something like this. Now the wick is this, maybe something like this. Take out 93k and then aggressively bring it back up, and then next month you open up here and go to all-time highs. Like that. Well, depend how strong. We will take out this high. I think it will take out this high. Something like this. First, with a tiny wick, because it will open and go up. Something like this. It's got a fair value gap, maybe. No, no, like this. That's what I'm thinking. Unless we get something like this, then it will have a problem. Like this, then we will have a problem. Then we'll start looking for this low, and then do this. They get one more chance to buy low before all the black rock. I think this is a black rock low, right? Don't know, maybe this one. I can't remember which one, but yeah, you get a picture. Black rock won't let it drop to the price that before the ETF. You know what I mean? So they won't upset, they won't piss off their clients, at least the one that get in earlier. They don't mind about those getting late, you know. They don't care about them, because they only care about those the deep pockets are the ones that get in really early. Okay, so but they want to sell more, so they will go make it happen, drop it lower, so give them a reason to sell more. So you see a lot of people, you know, their salesmen start picking up their phones, calling their customers, get into the ETFs. Once they're done, everything's loaded up and they send it back higher. Then their clients are happy, you know, they take their commissions, right? So watch out. And hope today's session you find it